Between a softening labor market and recent better-than-expected inflation data, economists considered yesterday's interest rate cut to be as sure a bet as Giannis Antetokounmpo putting up 20-plus points per game. They were right. The Federal Reserve slashed rates by a quarter point to a range of 3.75% to 4.00%, their lowest level in 3 years. The real gamble is whatever the rate setters do next. When the Fed issued this year's first cut in September, 2 more seemed likely. But analysts are less confident in lucky number 3 after Fed Chair Jerome Powell said yesterday that a December rate cut is not a foregone conclusion, far from it. If there is a high level of uncertainty, then that could be an argument in favor of caution about moving, Powell said, referencing the lack of economic data due to the government shutdown. With employees at the Bureau of Labor Statistics furloughed, monthly job reports are delayed indefinitely, depriving the Fed of one of its key barometers. Yesterday's decision relied on last week's promising inflation data and some state-level metrics like unemployment claims, marking the first time a government shutdown forced the rate-setting committee to amend monetary policy without complete employment numbers. Come December, the Fed might be working with even less information if the shutdown persists. Consumer price data isn't being collected right now, so the next inflation report might not get published, the White House recently warned. Another complication is that the girls are fighting. For the first time since 2019, yesterday's decision faced dissent on both sides. One Fed official wanted to hold rates steady, and another, recent appointee Stephen Miron, wanted a bigger cut. Committee members have strongly differing views about how to proceed in December, Powell said, as the Fed looks to strengthen the job market without spiking inflation from its current 3% rate. Separately, the Fed also said it would stop shrinking its $6.6 trillion balance sheet, which it started trimming 3 years ago to prevent the economy from overheating.